Edison Byzyka, the Vice President of Investments at Hefty Welth Partners, is back to go over the changes we've seen in the market. Edison, always a pleasure to have you.
Great to be here.
And during the first quarter, we saw some economic growth, but the data released late April significantly went against what economists were projecting. Why is that?
Yeah, so the GDP number, the headline number that came in, was announced at 0.2% growth relative to that 1% increase. So when we break that number down at the optimistic and maybe not so optimistic components, there are three things that happened that really curtailed growth. We had a crippling winter that significantly derailed economic growth, similar to that of last year. You had a major port on the West Coast that was shut down. This is a major port that is responsible for a substantial amount of goods that flow into the country. Okay. And most importantly, in my opinion, is the strength of the U.S. dollar really curtailed exports out of the country. The stronger the U.S. dollar relative to most other currencies, the more expensive our goods become abroad, and that really curtailed exports out of the country. So on the optimistic side, consumption growth was actually really, really important in that sense, and it grew better than had been anticipated, and part of that is lower oil prices, which are means lower gas prices, and that net savings does mean better consumption figures.
Okay. The housing market, I actually just did a story about this, talked to some real estate agents. They're very busy in the summer. As temperatures heat up, a lot of us want to enter the housing market.
Sure.
You mentioned consumption data as a positive, but the overall housing market, which is a big consumption ticket item, is somewhat lagging. You say, why might that be?
So the housing market is kind of in a limbo, right? We have 1 month we have phenomenal data, and we have another month that is maybe not such good data. So most perfect example is recently we had new home starts, new home sales that significantly outpaced estimates. Yet we had existing home sales recently here completely miss estimates. So that tug of war component is very sporadic across the U.S. So it doesn't really apply at every part of the country. It might be better on the West Coast opposed to the East Coast. And kind of the explanation for that, there's not a clear-cut explanation for it. But now that we're starting to see this spring season come back, the summer season come back, I think housing market, the trends will continue to be optimistic as they had been, minus that short-term volatility, which I don't think we're ever going to get away from here in the near term.
Changing gears a little bit, inflation rates on a lot of consumers' minds. How does the outlook look there for 2015?
Sure. So far in 2015, inflation has been relatively neutral, both from a consumer standpoint as well as a producer standpoint. 2015 is likely to remain neutral. Comments from the Federal Reserve yesterday suggested that same concept. But the most important thing about inflation here is wage growth. The inflation tied to wage growth, that has still been lagging. That is going to be the most crucial component for 2015, and we hope to see about maybe 1.5 to 2% growth in that area.
In summary, outlook for 2015, what should consumers know just generally?
Sure.
What are you predicting for the future?
Well, as we heard yesterday from the Federal Reserve, rates will likely rise in 2015. That probability has increased, right? So if somebody is maybe looking to make a very big ticket item here, to purchase whatever that may be, maybe acting sooner than later might be better for you in terms of interest rates on that component. As it relates to the markets, we're likely to see maybe kind of a limbo again here, that tug of war component to continue as we have a lot of international forces influencing U.S. markets. But overall, I think short-term volatility is here to stay, and long-term economic growth is also here to stay. It's looking very positive.
And if anyone is interested in learning more about what's going on in the economy, how can they get a hold of you?
Visit our website at heftywealth.com. Our latest research is there, our latest way of thinking, and you can contact us directly through the website.
Edison Byzyka with Hefty Wealth Partners. Thank you so much.
Thank you.